Hello guys, how are you doing? This is Peter, the lead instructor for Peeta's Forex Academy. So on this video, I'm just going to make a quick lesson on two major reasons why a lot of people make losses and how people trade order block wrongly. And if you understand these two things, and this is not really like a financial advice, everybody is free to use what they want, but I am just teaching you based on what I've experienced personally and what I think works. You get what I'm saying? So you're free to not use what I'm saying, but I'll be happy if you can take note of these few things. So now, there are two reasons why a lot of people make a lot of losses, especially in the area of order block, and I need you to understand. And first, you need to understand that order blocks are areas where institutional buyers and institutional sellers position their orders and they want to buy or sell. Institutional buyers like banks, hedge funds, the big guys, basically, not like me and you that trade through a broker. Like whereby we found $100, $10, $1,000. No, institutional buyers are the ones that come with millions of dollars, and when they enter the market, they leave a traceable impact that you can know that these ones are the guys that are controlling the market. So if you can be able to understand that, it should help you in understanding how the order block itself works. So now these are the two things I've put on my screen, that the major mistake that many people make is that the first is that they're using a lower time frame order block. I'm not saying that if you trade with a lower time frame order block, it will not work. But you see, how to trade a lower time frame order block, I am going to make a video about that soon in my next video. But for this, I just want to help you understand how to trade a lower time frame order block. Because if you were to trade a lower time frame order block, it should be in correlation and in partnership with the buyers you have already gotten from an higher time frame. You don't trade lower time frame independently. There is a pattern to be able to follow so that you can be able to trade it exactly, and it should be able to give you the profit you want. Now, the first mistake is that they are using a lower time frame order block, and the second is that they are using stop loss levels and they ignore invalidation zones. They use lower time frame order block, and sometimes people use stop loss levels and then they ignore invalidation point. Now, let me first explain the first one, which is they are using a lower time frame order block. On this chart, I'm going to be explaining using gold. I dropped this trade on Monday, and here's what my buyers, what I saw. I saw that, let me see. I saw that price took out this low. Price took out this low here. So, and it took out liquidity from this low. Automatically, I knew that this high that printed this low will be taken, because that is the next place that liquidity is. So I anticipated that price was going to come and clear. Let me even show you when I dropped the trade, because I dropped the trade on my Telegram community. If you are not on my Telegram community, the link is on the description. So I dropped, look at the trade here. I shared the trade on my Telegram community, and I said I was going to be buying from here. That's people can be able to enter and risk appropriately. But guess what? I took a loss on this trade. Why? Because I ignored those two things I was saying. Now, I said I used a lower time frame order block. Now, this was an order block. In fact, I found this order block in the 15 minutes. This was an order block area that I found, and then I marked it out. And then I took a buy, put my stop loss. I even left a little space below the order block for you to know that I was even safe, trying to play safe, thinking that I was even safe. But guess what? The price took me out and went my way. Now, what was wrong about the order block I picked? Now, let me go to like an higher time frame, like the 2 hours or 3 hours time frame. So now this is a 2 hours time frame. Sorry, I'm using my phone. I just don't want to have an excuse not to drop this video today. That is why I'm using my phone. Sorry, a 1 hour time frame rather. I saw it on the 1 hour time frame. Now on the 1 hour time frame, you can see that this right here is the order block. I'm sorry, I think it was the 3 hours. Thank you. It was the 3 hours time frame I saw. So now look at this. On the 3 hours time frame, this right here is the order block. This right here is the order block. This candle here is the order block. So why did I want to use one of the 15 minutes time frame? So if I had used this, I would have been safe on the trade. But because I ignored that, it made me experience a loss on that trade. So that was the first mistake. I used a lower time frame order block, made me to now enter the trade when I was not supposed to enter, and then I took a loss which is the second thing I want to quickly talk about. Remember, the analysis was very, very correct. I knew that price had already taken this low, cleared the liquidity in this low. I knew that this high was the next place. So you could see that the moment price took out the high, the price is already making some move, and then I'm still anticipating some more moves to the upside. But that's not what we are doing this video for. So after price took that hit, I was certain that it was my mistake that made me lose that trade. So I've solved the first part, which is that using a lower time frame order block. So when you want to place a trade, if you know you are not using confirmation, make sure you are entering your trade from an higher time frame order block so as to be safe. Now let me quickly talk on the second part, which is when you are using the stop loss levels and ignoring invalidation zones. See, there are difference between a stop loss and an invalidation level. A person can enter a trade. Let's say a person can enter a trade. Let me say somewhere here. I'm trying to explain something. This is a break of structure. So, and then you now say you want to enter. This is an order block here. This is also another order block here. This right here. It's another order block here. Now, I'm basically, so instead of, so some people will now say they want to enter a buy. They will now enter their long position from here and then target the high and then put their stop loss just below their order block. So if you take trades like this, in some cases you might be safe, but it might not be safe every time. So what will happen is that price might just come, do something like this, comes to your point of interest, takes you out, and then go your direction. Do you get what I just explained? Let me explain it again. So in many cases, you just see price just comes, does something like this, takes your point of interest out, and then goes out, and goes to your target. Exactly what happened to this trade I took here, on this gold. You see, it took me out and then went to my target. Why did I lose? What I used here, it was a stop loss level. I didn't use an invalidation level. An invalidation level, I'm going to make a video on that. An invalidation level is a level whereby if price takes that level out, it means that the price is no longer going to do what you intended for it to do before. So let's say you were planning to buy before. You were planning to buy around this area. So automatically, this level becomes your invalidation level. This last low here becomes your invalidation level. So on the normal sense, your stop loss should have been below that level here. So that means if price now eventually comes, take out your stop loss, it means that market is no longer going to buy. The market is going to keep selling. So your invalidation level should be the last straw of hope that will show that this market is either going to do what you planned for it to do or not. You get what I'm saying? So instead of using stop loss level, make sure that you're putting your stop loss at the levels whereby once price take out that level, it means that market is no longer going to buy. Rather than for you to now be kicked out of the market by losing money when the market hits your stop loss and the market still goes your direction. So that was the mistake I made on this trade. You see, not every time we have to blame the market that the market was manipulated. The market took me out before the market. Funny enough, when I was analyzing this trade, I had the urge to put the stop loss around this invalidation level. But the reason why I later used this place was because this trade was not up to, if I had used this invalidation level, the trade would no longer be 1 to 3 risk to reward. It's no longer going to be 1 to 3 risk to reward. So I was thinking, okay, since this market is an high probability order block, because it met all my criteria, there was a huge fair value gap around here. There was a huge fair value gap around here, so it means that this other block should hold. That was why I had to use a stop loss that was just below it, and guess what? The rest is history. So I just thought to make this video. If you're able to learn a lot from it, just drop a comment, and then you're free to join our community. The link is on the bio, and if you want to reach out directly to me, my WhatsApp number also is on the description. See you guys in the next video.